Yeah, that's a good question. I think over the last couple of years, I think we have really seen a development where equity capital market investors or institutional investors that invest into listed vehicles have gone a long way of understanding the underlying sort of fundamentals of the market, but also underlying sort of the operations that underlie these businesses. So I think that the developments that have happened there are very good. I think clearly there are some equity capital market investors that are what we sort of term as specialists that focus on the real estate sector, and they understand the businesses of these listed vehicles very well. And then there are generalists who I think again have come a long way of understanding it. I think some of the challenges that they have faced perhaps in the run-up to where we are now is understanding really how these businesses operate, i.e. the lease structures. What does it mean that you have to, it's an operational business, what does it mean that you have to re-let all the units every year? You don't have that same type of security that you have with long-term leases in the retail or in the office sector. But I think people understand that actually has worked out very well. I mean, if you look at the big players, they have had close to 100% occupancy in the last couple of years, always. And the business models in general have been very resilient over the last, and have been very resilient to any sort of shocks that we have seen, whether it's student tuition fees increases in 2012 or 13, whether it's the financial crisis in general. This is a sector that equity capital market investors have generally understood and love to like, because it offers very stable, sustainable income return profile.